All right, good evening, everybody. It's been a long time in the class. It's been a while. I got very busy, and I believe I've taken your class so far into. I've already laid a very strong foundation with the class. I've taught to you. We've had like over 20 classes with CHICS in Trade, and I've laid a very strong foundation. Of course, there's still so much to also share. There's so much to share because this thing is wide, and since it's wide, you still have a lot of other things to share. But beyond sharing a lot of other things, beyond sharing so many things, I've already laid a very good foundation for you. So much so that if you go through all the lessons that we've had, if you study them very well, you go over the video and you painstakingly watch those videos, I believe you will learn a lot. I believe what I've taught you so far in about 20 or 20 plus classes are more than enough to give you a very strong, sound foundation. Of course, even though there is still much to share. Okay, but I didn't intend to teach you tonight. I didn't intend to share with you tonight, but I just felt, let me share with you, let me analyze the market with you. From tomorrow, I'm going to start sharing. I'm going to continue your class. Hopefully we should have a class tomorrow. But tonight, all I want to do is I want to analyze the market with you. I want to share with you how we took trade today, how we're able to enter, catch moves, about 3 moves today, and then tomorrow we'll continue. But before then, I want to continue. I want to teach you a little bit further from where we stopped. Okay, I remember I was teaching you where we stopped was when I was sharing with you the reversal candlesticks, and over there we're talking about the doji. We talked about 4 variations of doji, 5 variations of doji actually, and then we talked about I don't know if I taught you reversal engulfing candles. I don't know if I've taught you the engulfing candles. I don't know if I've taught you a few other. I can remember I taught you doji, the 4 variations, but then tonight I want to teach you a very important candle. This candle was, the 2 candles I want to share with you tonight, they're my favorite when I started trading financial market. When I started trading with price action, they were my favorite. They made me a lot of money because in those days they really fail. They're reversal candlestick patterns that when you see them, I guarantee you, in most cases, they will deliver results in most cases. And so let me get to my screen now. So on my screen here, I have pin bar. Pin bar is also called hammer. And then I have this is a diagram, and this is how it looks like. And then on pin bar is usually a bullish reversal candles. You only consider pin bar or hammer when you are looking to buy. Usually when the market is an uptrend, then you find a support on an uptrend, and then you see a pin bar on a support and an uptrend, and then it gives you an entry to buy, entry to go long. And this is how it's formed. Let me read what I wrote about candlestick pin bar or hammer on my screen. As soon as the candlestick opened, the bulls took control and drove the price down significantly to a low. That means when price opened here, the bears came in, the bears took the price, they rallied the price down, they drove the price down to a low. But then the bulls began to take control and managed to drive the price up all the way to close above the opening price or a little less below the opening price, forming a very short body. And so the bears came in, they drove the price down, and then the bulls came in around here and drive the price up, so much so that the price closed a little bit above the open price, or in this case now, a little bit below the opening price. That is when a pin bar is formed, usually a small body very close to the opening. This shows a very strong bullish momentum. When you see something like this on your area of interest, like I always explain to you, when you see something like this on your area of interest, what tells you is that a bullish reversal, a bullish trend is about to happen. this shows a very strong bullish momentum. If the next candlesticks to form breaks above the high of the hammer, that will confirm that a bullish trend may be starting. And so what it means that when you see this candle now, if it has a little wick above or not, when you see the price moving up above this now, what this information is telling you that just go long, just take your buy, just enter a buy setup, okay, with every other parameter that you have considered. And so if the next candlestick to form break above the eye of the hammer, that will confirm that the bullish trend may be starting. The color of the hammer does not really matter. The color, whether it is green or it is red, it does not matter, okay? But there's something I want you to understand, very, very important. Now, I want you to know this. Don't ever forget this point I want to share with you. And it says that the tail of the candlestick usually should be at least 3 times of the size of the body. The longer the tail of the pin bar, the stronger the pin bar is, the stronger that signal is. And you see a pin bar with a very long tail, is an indication that look, it's a very strong signal to the bullish side. Very strong. The longer the tail, so you see for a candle to be a pin bar or an hammer, the tail should be at least 3 times the size of the body. So then look at this information to look for a hammer on upward trend entry, upward trend line entry point to go long. Look for a hammer on upward trend line entry point to go long. That's very, very important. Very, very important. And then so I'm going to be showing you on the chart. I'm going to show you how you trade it. In fact, the analysis I intend to share with you today, actually we had this reversal candlestick and that gave us a perfect entry in the market. Okay, next I want to share with you is a shooting star. A shooting star is actually the exact opposite of the bullish hammer, but in this case it is a bearish reversal candlestick pattern. Okay, the shooting star makes a great new high. Look at it, man. A great new high, but fails to close anywhere near it. It didn't close anywhere near the high. Fails to close anywhere near it. Additionally, the real body makes very little or no progress in the bullish direction. What makes it a shooting star is the long tail. The failed attempt at the closing near the new high. The color of the shooting star does not matter. Okay, the formation of the next candlesticks, variation, the low of the shooting star, and closing below the shooting star is a good confirmation that the downward trend is probably starting. So what this actually means is that when you see a shooting star at the end of a bullish movement, maybe at a resistance or at a downward trend line, and then the market is already on a sell, and then you know this is sell, and then you now see just at the downward trend line or at the resistance, okay, or at the supply zone, you see a shooting star, is a strong indication that the price is about to sell. It's about to sell. Okay, so let me take you to the trade I actually want to share with you today. First of all, there's something I've not shared with you in this class, CHICS in Trade. I've not shared with you, I've not really taught you in details how to determine your support and resistance, your demand and supply zone. I've done it little way. I've actually done it, but I've not really dedicated a complete class on how to draw support and resistance. I've taught you trend line. Of course, trend line is also is the diagonal support and resistance. Okay, so but then I mean the horizontal support and resistance. Horizontal support, I've not really taught you that. So now let's get back to the screen. So this time around, my time frame is on 4 hours, and I'll be switching my chart from candlestick. I'll be switching it to line to line to line. I want to change the color of my line from green to black. I want to change it from green to black. Line chart converted to black. Period. All right. So how do you actually draw a very good support and resistance? So what do? I come here and I draw my rectangle bar. Okay, draw the rectangle bar, And then okay, so now I'll be looking for where there are multiple reactions in the market. There's a reaction here, then there's a reaction here, there's a little reaction here, and hopefully in the future, even in the future, there are likely going to be reaction at that point in the future. Okay, so I pick it again. Okay, there's a reaction here, there's a reaction here, and so in the future I'm expecting a reaction. Then I come to this level, there's a reaction, a reaction here, you know. You just make sure that you are trying to align, make sure that then I have another reaction here, another multiple touch. It touch here, it touch here, it touches. So there's a reaction here, reaction. So in the future, there's going to be a reaction in the future. And then I have this, which is the closest to the current price. And this is how to draw. I'm going to teach you in detail so much more later on. But then for now, let's just make do with this. Let's make do for the purpose of tonight's class. Let's make do with this. Okay, so I come on, then I switch back to my time. I switch back to candlesticks. On the candlesticks, so you come back here, make very little adjustment, it's not far, very little adjustment. So right now I have all my support and resistance. So in the future, these are my area of interest, watching what the price will be doing, my area of interest. So now today's analysis I actually want to share with you, and this is how you're able to enter the trade. Now around 9:10, okay, all right, you can see my screen now. You can see here to here, you can see there's a resistance here. As at the time we were looking for setup today, this was what was happening. It was these candles that were forming. These candles were forming. But don't forget that, look, when you check price on 4-hour time frame, is actually the price is bullish. The market is bullish. It is forming series of higher highs and higher lows, higher highs and higher lows, higher highs, and then you see higher lows, higher highs and higher lows that is being formed. Okay, higher high and higher low. So you see here now, you see higher high, then you see higher low, you see higher high, then you see higher low, then you see higher high, then you see higher low. And I told you, if you have been paying attention to me, I said the moment you have your P1, your P2, your P1, your T1, your P2, your T2, your P1, your T1, your P2, your T2, anytime from here, you only be looking for opportunity to buy. The moment that thing is completed, you only be looking for opportunity to buy anytime from here. The moment this is formed, you are only looking for opportunity to buy. So for example, this market now, you'll have been buying from here. Look at it. Okay, so on this market now, even on 4 hours time frame, already we have an entry here, you have an entry in this place. But if you switch to a lower time frame, you're going to be having much more entries, so if you're buying from here now, if your first buy is here, you should be able to have plenty entry, which I don't want to explain now. Plenty entry like from here to here, entry like 0.1, my 0.2. Of course, we have entries in this place because this is the third touch of your trend line. You'll be having an entry there. But for today, which I actually want to share with you, okay, there's a support here. When we wake up in the morning, this was the candle that we're forming, and then we were waiting for opportunity to go long. Don't forget that we're only looking for a buy because the market is forming series of higher highs and higher low. We're only looking for opportunities to buy, and so today now, so what we do is every day, which opportunity do we have between the London session and then the New York session? What are the opportunities that we are having between this time? So we look at it, and today now, this support was our interest. This resistance that become support with our interest. You can see market reacted here. So what happens is that when it goes into the future, and the market is coming back, will there be a reaction on the former resistance? Will it turn to support? So your eyes are always there. All of a sudden, I saw this pin bar. This pin bar was what gave us entry today. This pin bar is actually our entry point. The moment this candle formed today, and then this was where we call the signal. We entered the trade around here at that price. We entered trade at 1.33712. We entered the trade at this particular point, and boom, price went up. And how many pips was that? We had about 63 pips, on that trade for today. This is the power of a pin bar. And I told you something very important. I said reversal candles are not important until they are formed on an area of interest. So area of interest is the most important part in this equation, and I've shared with you that before. And I said you're going to be looking at your area of interest. Your area of interest are your down zones. And what do I mean? They are your trend line touch, or they are your support and resistance, or they are Fibonacci retracement level, period. You'll be looking for those reversal candles on those areas. When they are formed there, they give you a better chance to have a profitable signal. Okay, so let me quickly take you to the next trade that we took today, which is just the opposite of the GBPUSD. The one I showed you, this one is USDJPY, because this is just personally traded. Okay, because I cannot give you signal on GBPUSD and give you a signal again on USDJPY. Usually they move in opposite direction. So when GBPUSD is buying, like that one we told you now we bought, but USDJPY was just selling. Okay, you're just selling at that time, and then you can see here now that price was there was a sell here. Okay, let me see, how did you analyze the market today? Let me see. Okay, so we had to analyze the market like this, and I think it was this. Okay, this was how we got the entry. This market was selling because this trend line is already broken. It was selling, and then I had this. It's the exact thing that took me into this. I had this trend line, 0.1. You can see my 0.1. This was what gave me the plenty pips today, 0.1, and then I had my 0.2. My goodness, I had my 0.2, and my entry was on this third touch, was on this shooting star. This is the candle I just taught you now, shooting star. I saw this shooting star, this particular shooting star. I saw this shooting star, the same time the pin bar was forming on GBPUSD, the shooting star was forming on USDJPY. I know that they're double confirmation. Many times I do that. Many times I use GBPUSD to confirm USDJPY. Okay, so if USD is asking me to buy, I want to be sure that USDJPY is asking me to sell. So the moment both of them are exact, they give me a perfect signal, in opposite direction, I know I'll just take one of them. There's no need taking both of them because you'll be overexposing your account to to the same thing. So I just take it like that. This is the candle. The shooting star took me in on USDJPY, while the pin bar took me in on GBPUSD, and that is just it. And that was a very powerful signal today. And let me see how many people was this one. At the close of the shooting star, it was a perfect entry. But how many? This price came 90 pips, complete 90 pips, and that's remarkable. Imagine with your lot size how much you'll have made today. Okay, that was how we entered that trade today. And I think there's another signal on gold. There's another signal on gold. Yeah, this is the signal on gold. This was that signal on gold today. Okay, this was the signal on gold today. Okay, you need to understand that the market is buying. It's buying because I'm looking for opportunity to buy, because you see, this is clear that this bullish candle now. Actually, this is how I traded that market, because I was seeing that there was a ranging market here. Yes, I was telling myself this is a ranging market. This is a ranging market. And if anything I see, if I see a buy, I will take. If I see a sell, I will take. That's what I was telling myself. Okay, I actually used a bigger screen. I used my curve screen to analyze the market. It wasn't on this laptop. I was using a curve screen, so I was actually looking at it. I was standing in the room. I was watching how the candle was. So here, and I was thinking, if it's buying, fine. If it's selling, fine. So whichever one it gives me, I'm going to take. But then there's a pullback here. And exactly on this support, a pin bar forms. I don't see the tail of this pin bar. A pin bar is formed. That's a very long thing, exactly at the support. Exactly at this support. Look at it now. It was a resistance here. It was a support here. Look at it. A reaction, and then you now see another reaction in the future. This is when you are now with your screen. Look at it. Massive entry. And this is where you're going to be taking your entry. The moment that candle is formed, this is how your entry is. And imagine by how many pips did the market move. Market actually moved as far as 642 pips. That's gold. 642 pips. It's very massive. It's very massive. And those are the three trades that occurred today. These are the three trades that we traded today, and it was very massive. Very massive. And I believe that you will have learned something by just analyzing the market with you. Okay, sometimes maybe from January next year, I'm going to be doing a lot of analysis with you guys. Choose one day in a week. We analyze the market we trade the previous week, and then we have a projection into the coming week. Anytime from January, I'm going to announce to you so that you can all learn together and relate together. You can have your own bias. I only analyze the market based on my own view, because we can have different view in the market, and sometimes we can have a different view and still both make profit. Okay, because you see, for example, you look at something like this today, and somebody can actually take a sell here, because on this resistance, there's a resistance here. On this resistance, he's seeing a shooting star or something like a doji actually, and then he can take a sell. When taking a sell is out of the market, and then but you are here looking for a buy. And I told you it's a ranging market. You can you can be looking for both buy and selling at the same time. Just that you'll be buying at the support, you'll be selling as resistance. I told you the ranging market. When the market is ranging, the market is moving between fixed resistance and support. Therefore, you look for opportunity to buy at a support, and you look for opportunity to sell at resistance. I've taught you that before. You must not forget that. So these are the three markets we traded today, and I believe you should have learned something from here. We'll continue class tomorrow. Let me see how it's going to go. We can spend like 1 hour with you. Then at night, maybe between 30 minutes, 45 minutes, it might not be up to 1 hour. And then, for the next consecutive night, and see if we can actually learn so much more. Just continue from where we stop. So thank you. Good night.